Yeah, this is a quick video to answer a question on the Discord group about how I enter trades. What I've started to do is I've been using the volume level, so I add the VWAP. This is the weekly VWAP. It's attached to, it anchored at the beginning of the week and shows the levels. And this is a monthly VWAP anchored to the beginning of the month and running across the entire month. The weekly resets at the beginning of each week. The monthly resets at the beginning of every month. At the beginning of a month and a week, the weekly is the same as the daily, which I have as well. Here anchored at the beginning of the day. Then in addition to that, I also have the volume profile. It runs across the day, and I keep track of what they call the initial balance, which is the high and low of the first hour of the futures open New York. So for the euro dollar, that is 8:20 Eastern time, which is 14:20 my time. Now, the VWAP is a set of bands. The center is the main VWAP itself, and the outer two bands are the one standard deviation of it. Now, the VWAP is used by institutions, etc., and banks to enter trades, and it's considered effectively a fair price. It's a place where institutions actually trade, as opposed to sort of unknown areas. So as these act as support and resistance levels, I use them to launch trades off. What I did initially was, if you have a look here, this was a trade call this morning that was too early for me, but it's a good example. There was the FEG there. Now, what I initially did was, when there was I wanted a reaction at or including one of these levels. So, and this would have been good enough for me. We had the lower band of the current weekly VWAP. Weekly and daily is the same today. Price came up and then dropped down, is rejecting here. That is, to me, a setup, and I would have gone short there. The drawback of that is it didn't get me in any earlier, so I was still had the problem of, if this did this and then came back. Wait, let me draw. Where's my drawing tool? What would happen is, I wouldn't have any chance to work a better exit, and I would puke. And what I really wanted was a way of entering the trades early. So just give me a second. I was trying to get the Epic Pen up. I don't know what his problem is. There it is. Um, so what I actually wanted to do, because the problem is, of course, as you know, very well know, is what very often happens is price comes down, it starts like this, and then it goes back, and then it goes maybe to the VWAP maybe, and then comes down. So that is one of the things I'm trying to find a way of doing is entering earlier, so I could be sort of in here or here. So just by the time it gets to here, I've already got room to be covering the trade, a reasonably logical break-even point. So what I've really started working towards now is, instead of waiting for the confirmation, what I actually do is I look for a level, and I enter with a limit order on the actual level itself. I enter blind before the candle confirmation. As they say, confirmation is for Christians. So in this case, what there was. This is something I'm still very much working on, though, trying to figure out where to draw these. If you look here, we had the euro traded in this balance area here, then it trended up and then traded inside this range of the last 2 days. So I also had on my chart what they call a composite volume profile, which is a volume profile drawn over several sessions, which was to there. I had that on the charts on Friday evening, going into the weekend. Now, if you look here at our volume profile, we have the value area high and the value area low, and inside this is where 70% of the day's volume traded. So it's the most popular prices that they call the balance. So when price is trading in here, it's in balance, as opposed to trending outside these areas. And the place the most volume trades is the point of control, which was slightly under this trade, which isn't great. But what I liked about this trade was, if you look here, I had a point that I had the value area high over here, and the high of this day, which also happened to be that day's value area high. Now this was at around about on the future, roughly 1557. So if you come down to here, 1557 sits here, just at the very bottom of the FEG. So what I actually been doing now is, well, I haven't necessarily been setting limit orders. I've been waiting for price to get there and then kind of entering, as opposed to setting it, overnight or from a long time away. What I actually do is when price gets here, if it sort of hesitates or isn't barreling a full speed at it, I'll actually enter here. So when price gets to those volume levels, I will enter my short here, maybe with an ATR based stop. I'm still kind of working on that. So I would be in at 1557 on the future, and if I would trade it on the CFD, the Euro USD, but I would just roughly convert the price. I can't do it exactly, but I would trade basically at that high and this high. I would enter my position. So I would be in here. So by the time I got here and everyone on the Discord group was steaming in, I would already be fairly well in profit. Looking at that range, it was 5 points. The stop was probably 5 pips given the range of the euro at the moment. So I would probably already be at 1R by the time it got here. And that is what I've been trying to work as that's how I've been trying to enter early, so significantly earlier and without confirmation. One of the drawbacks of that, however, is what I don't know how to do is, well, you can't do anything about it. The drawback of that is, take gold, for example. The gold wasn't quite right today because there was a monthly VWAP that had just below this. But if this VWAP had been a little bit higher, price, I would have entered here when it hit the VWAP, and price would have barreled straight through it and stopped me out. So, all the methods have advantages and disadvantages, but that's essentially what I'm working on now. I can show you. Here's another example of a trade I posted on the group, a markup I did a little while again of a euro trade, where you see there was the FEG, and here was the weekly upper band coming in here, which is why I marked this as my preferred entry price, because ideally I was hoping the price was going to come up here, and then I would basically short blind here. I'd be a seller here if price maybe here, but I don't know if but you see, I said this is where it's going to fake out. So what often happens is, in this case there was a monthly level there too, but what often happens is price will come up here, and then we'll get our reaction, and then it'll come back, tap the final level, and then move. But very often, in this case, there could go both ways, because we had a monthly level here, but very often there'd be no level here. So that's why we get these fake outs, because price moves early, but you can't necessarily see it with just a price chart. Now, the other thing I noticed with this, which is another thing I'm doing to eliminate trades, is we had this trade here, and well, that's not right. We had this trade here not that long ago, and the next day we had exactly the same thing happen in the Australian dollar, where price went. Okay, some of these aren't my notes, so won't make any sense, but there was our FEG here. Price came down, gave a nice reaction. Everyone steamed in long, and it immediately came down. Everyone puked. Now, again, there was no way of telling either way. But what I noticed with this trade, and like I said, I noticed with the Australian dollar as well, is it reacted to what I call the lower time frame level. This here is the 15-minute reaction seen on a 2-minute chart. Price came down to the middle of the initial balance and the VWAP from the New York future session. It bounced up to an IB extension high of the initial balance and the Globex VWAP. Now, I call these lower time frame levels. It's not strictly true, of course. These are intraday levels. I mean, these run over the whole day, but I was looking at using weekly and monthly levels to back the 15-minute trades. I just called it a lower time frame level. So what actually happened here was price is going down, and our reaction in inverted commas, which is why I always put the in inverted commas on the group, because it's, it's sort of called a reaction, but we don't know what it's reacting to. So what I noticed was it would react to these levels here. It would bounce intraday, and this was the complete move. It came off the RTH VWAP, traded up to the initial balance high and VWAP, where again we had support, and the market carried on going down. And from the VWAP it's going to come down to here, and then potentially on down to here. And that's exactly what happened. So our price went from here, it went to here, it then came down there. Then it could care less about the weekly VWAP, and it carried on to the weekly lower band. And I made my notes because it was of note that once the price came in here and entered the weekly band, a price target is exactly there, the weekly lower band. But the point of what I noticed was that even though this reaction appeared to be inside this FEG on the 15-minute, it was the reaction itself had nothing to do with the FEG, but I say nothing to do with the FEG. The reaction itself was to smaller intraday levels, which is why we never got a continuation on the bigger time frame. So that, in essence, is how I've been looking at entering these trades and or potentially rejecting them. Because what I found as well is if the trade, often we will have a reaction, and the price will come up, react to an FEG. Let's say we had a bearish zone here. I found price will come up like this, react, come down, and this is the close of a 15-minute bar. So I have a 15-minute bar here like this, and everyone will want to steam in short here, and price stops and just goes up and stops us out. Now, my opinion on this one is what actually happens is here the price dropped not because of sellers steaming in, but because of lack of buyers, which is not quite the same thing. So price came up here, buyers lost interest, which allowed sellers to when I say overwhelm them, it's just a normal amount of sellers, but there was little buying interest, so the bids were pulled, so the sellers could easily clear the bid and drop price. It came down to here at the monthly and weekly bands, a level, and that of course is where the big buyers actually want to trade. So then the big buyers stepped in again, cut the sellers off, and off it went. Don't have obviously a volume footprint or any kind of proof of that, but that does seem to be what's happening. But I did notice a number of times our entries will be directly into these levels, and price will actually reverse. So it's another way I use this to eliminate trades, but it's still something I'm very much working on. So I'm a bit all over the place with it. But in any case, I'm not sure if that helped, but that's pretty much what I'm looking at doing now. Cheers.